Hello and welcome to My Finance Teacher. Today is 25th of December 2017. Merry Christmas, everybody. Now let's start with looking at the US dollar. It is clear that in early September, this is a weekly chart in front of you. It is clear that in early September, US dollar has reached a bottom in its intermediate cycle, which generally lasts for half a year. This cycle seems to have been stretched very much. Whichever way you consider this cycle to be going on, either an unusually stretched intermediate cycle that lasted for about a year, or we might count this cycle to be going on since April 2016 to February 2017, and another intermediate cycle that finished recently, starting in February 2017 and finishing in September. That would give us half a year intermediate cycles. In either case, we've reached a bottom recently, which means we are in a new intermediate cycle in the US dollar. However, strangely enough, the dollar has dipped back down under the 20-week moving average, as well as under the 20-day moving average. Here's a daily chart in front of us, which generally shouldn't happen, especially when we are in an advancing phase of a new intermediate cycle. In addition to that, this was clearly a daily cycle in US dollars from early September to the second half of November, or closer to the end of November, and we're now in a new daily cycle which dipped below the 20-day moving average. So this is a little funny, and that might indicate that this daily cycle is not going to progress much further anymore. There is a possibility that this recent top close to 94.20, 94.2 on the dollar index might be the top for this daily cycle, in which case we still have about a month or so, or even more, of downward momentum within this daily cycle. We have a downward momentum for another month or so, because these daily cycles last for about 2 months. For example, the previous one lasted for about 2.5 months. If the same duration applies to the next daily cycle in US dollar, and if this daily cycle has already showed us the top, then a confirmation of that top might be if dollar breaks down through this uptrend line. In that case, that would be another confirmation that this daily cycle is not going anywhere. It is a failed daily cycle if it breaks below the recent low, close to 92.5. So if that happens, then this daily cycle might continue within a channel like that, within the unestablished channel so far. This is very short-term channel, so we'll still have to see how it progresses. But if this funny business with this daily cycle continues, and if that continues for another month or month and a half, if this daily cycle lasts for similar duration as the previous one, then sometime by mid-February or first half of February next year, we might see dollar close to 91.5. If that happens, that could be one of a very strong catalysts for a significant rally in gold, as we are expecting, since we have recently put an intermediate cycle bottom. The gold has been quite close to oversold levels on the 14-day RSI. Of course, it has reached oversold levels on 10-day RSI, which I also sometimes look at. And this rally from 1240 has been quite powerful. We have sliced through, or the gold has sliced through the 200-day moving average and through the 50-day moving average. Plus, the convergence of these two might have created a considerable resistance zone close to 1275, which didn't actually prove to be a resistance zone. Another possible or potential resistance zone is close to 1300. We see several peaks close to that price level. Plus, it is a psychologically difficult number to go through since it's a round number. Gold has struggled very often with 1300. However, I think this time there is a chance for gold to continue within this short-term daily cycle, even maybe slice through 1300 within the same daily cycle and reach a resistance zone close to 1320 before it pulls back down, probably dipping below 1300. Why I think so is because in the first daily cycle of the previous intermediate cycle, gold has rallied for nearly 6.5%, and if the same happens this time, from 1240 another 6.5% brings us exactly to the price of around 1320. I'm not saying that this is going to happen for sure, but there is a possibility that instead of pulling back from 1300, gold might actually slice through 1300 and pull back from 1320. But either of those two might prove to be the top of this short-term daily cycle. In a longer term, if we look at a weekly chart, in the longer term, I think gold is close to breaking through, finally breaking through this bullish upward biased consolidation triangle, which I have been going on about for so long. The reason I have been going on about for so long is, of course, that the price of gold has been stuck within this consolidation zone for nearly 2 years now. So I think there is a good chance that within this intermediate cycle, after pulling back from 1320, gold might finally break through this consolidation zone, and another possible resistance zone can be around 1400. So there is a good chance within this intermediate cycle we might get close to 1400, and quite likely we might break through the recent high at 1360, which we saw in early September, and the high before that in early July at about 1380. So that is how high we might reach within this intermediate cycle, probably going on until March or April next year. Not the intermediate cycle going on until March or April, or rather the advance within this intermediate cycle happening until March or April this year, after which time we might enter the declining phase of this intermediate cycle. And this advance into March or April next year, as I already mentioned, might be helped with a decline in dollar into at least early February. That is a possibility, but I'm still not certain about this possibility. So we might advance with gold cycle. I'll draw that again so that we see the advancing phase lasting into April rather than into May, as I had reached close to 1400. And what's going to happen after that with gold? Well, it would be nice if it meets a strong support zone at this downtrend line. However, I don't think we're going to see that. The bounce from that downtrend line might just give us a last daily cycle within this intermediate cycle, which will give us a lower low. Generally, intermediate cycles finish with a daily cycle that gives us a lower low, and if that is the case, then the next support zone is again close to 1320. So within this intermediate cycle, I hope to ride it up to 1400, get off the train and let it go back down to 1320 or so. In gold miners, GDX is also doing quite well over the last few days, and if we zoom out into a weekly chart, we'll see that over the last year the miners have actually been range bound quite a lot between 21 and 25 or so. So again, if gold breaks out from this consolidation zone, miners are very likely to break out from this range of prices. I'm quite certain miners should break through the previous two peaks in early February and in early September, and it would be quite nice for the miners to retest this recent high in 2016. That would be nice, but I'm not sure if they can do it. Another possibility is for the miners to test the high of this last daily cycle in second half of 2016. So that will give us a possible run for the GDX from around 21.2 to close to 28. That would give us a nice 32% gain. Let's hope for that, and remember, this is not investment advice. However, I do wish you luck in your trades. Thanks for your attention.